Hey everybody, welcome to the Money channel on YouTube. Go ahead and subscribe. I am a tax strategist. I have 13 years examining corporate returns of those that report 10 million or more in gross receipts and their assets, 18 years in audit, accounting, and tax combined. I'm a tax strategist, I'm a small business owner, and I am an investor. And I am the owner of the Money Masters Academy, where I teach tax strategy along with other items that affect your wealth building. Okay, so I want to talk about this meme, how to avoid tax legally, right? And so I'm going to read a little bit of it and then I'm going to try and break it down into layman terms because it's a popular meme. It's a strategy that a lot of large corporations have access to, not so much the small business owner. But it's good to know since people are interested. I'll go ahead and break it down. And so it says Company X, which is based in the United States, right? Which is deemed, in this case, a higher tax jurisdiction, wants to avoid paying tax on their earnings, right? They do this by setting up or incorporating a company called Y in the Cayman Islands, where there is zero tax. So this is what we call income shifting. When you try to shift your income into a lower or zero tax jurisdiction or a lower or zero tax bracket. So it can be from internationally or it can be from person to person, right? When people hire their kids and they pay their kids up to the standard deduction, they're shifting income to a lower tax bracket, right? So let's talk about this this meme. This is more on a corporate level, multinational, million billion dollar company level, where they have access and reach to, you utilize foreign resources. Okay, and so what happens is Company X, which is the United States company, right, owns 100% of Company Y. So that's what you call a controlled foreign corporation, CFC. And so what happens is Company Y, which is in the lower tax bracket, charges, and we're going to use widgets in this example. We won't use intellectual property. I just want to break it down simply. Company Y, which is the foreign company, sells widgets to Company X, which is the United States company. Now, remind you, the United States company owns the foreign company, right? X owns Y. And so all it is I'm in the United States, I'm paying my own company in, let's say, the Cayman Islands for items. Now, that's an expense on my tax return, right? But it's income to my company that's not going to be taxed because there's a zero tax rate in that jurisdiction. So what happens is there's a lot of scrutiny on the tax return in these situations. What's going to happen, or what could happen, and what usually does happen, is companies have what you call a transfer pricing study. Okay, this is a transfer pricing meme, so to speak, or post, right? Transfer pricing is exactly what it is: the price that you pay to transfer goods to your own company, your own controlled foreign corporation, right? So that you can in turn take that item and resell it, right? And so what happens is a lot of times the US company will pay more for said widget to their own company so that that expense can be artificially inflated on their tax return so that their taxable income can be artificially deflated. So the government is not that stupid. So what they do is you have to have a transfer pricing study, which in a lot of times is very costly, particularly to these large corporations. A transfer pricing study says from the company to the IRS, we did this study on why we pay what we pay to our own company, and this is why we pay what we pay, right? Now, why does the United States care what you pay your own company? Because they don't want you artificially increasing the cost of something so that you can shift income out of the United States. It's called outbound transfer pricing, okay? So what they're going to do is they're going to say, okay, how much of these widgets, if you were to buy them from a third party that's not related to you, that's not your company, right? And if the price of those widgets is, say, $1 a widget, and you're paying your company $5 a widget, right? They're going to say, well, what's this $4 difference, right? Why is your widget so special that you're paying $5? Basically, why are you trying to transfer $5 or $4 more per widget outside of the United States? Because we know that your company has a zero tax rate, right? So we want to know why, and they do have the authority to come in with a specialist, examine your return and say, hey, we have an economist, we have a transfer pricing specialist, your widgets are no different than a widget from a third party that you don't know, that you're not related to, right? Unrelated. And therefore, your transaction with your own company is not what we call arm's length, right? It's not justifiable. So what they can do is pull that income back into your tax return, okay? Based upon the market rate, right? Based upon several factors. So how companies avoid this, back to the transfer pricing study, is that they have their own economists, they have their own specialists, and put together a study that say, hey, this is why our widgets cost more. Our widgets do X, Y, and Z. They have to justify the reason. And they get it approved by the government, the IRS, okay? So that they don't have this issue moving forward, so that they can continue to be charged those widgets by their own company, right? Now, if you don't have a study done, which again can cost a lot of money, it can cost from tens of thousands to, way up there, so that you can continue to charge pay your own company for these quote unquote widgets, whatever the item may be. It could be intellectual property, it could be widgets, t-shirts, whatever have you. The United States government wants to make sure that you're not artificially increasing your expenses, right? Paying your own company more money than you would pay an unrelated company, so that you can take that money and basically shift it to another tax jurisdiction so that you don't have to pay tax on it. Okay, because whatever you're paying your company is an expense to your United States tax return. The higher the expense, the lower the taxable income. Okay, so I just wanted to kind of go over that because, I don't like to have a meme like this out of context, right? There's a lot that goes behind this kind of transaction. There's a lot of money that goes behind this kind of transaction. We see Jeff Bezos here. I'm sure he has lawyers, tax attorneys. They have, resources to protect themselves from said audits, said examinations that can take, up a lot of money if you have to hire representation. So they get what you call this transfer pricing study to avoid it, which is an agreement between the IRS, right, the United States government, and the company, that it's okay for, us to do this transaction within our own company. Okay, so I just wanted to provide some clarity, right? So let's just read the last couple of lines. Company Y cleverly owns the intellectual property that Company X needs to use. Y, the foreign company, licenses out the IP to X. In other words, I use widgets. Company Y sells widgets to Company X, the United States company. Okay. X, the United States company, makes $50 billion after expenses, but they don't want to pay tax on their profit. Since Y still is owed money, meaning they have to pay money for the intellectual property or the widget, okay, they must now pay Y whatever is owed, okay? Y charges $50 billion, the same exact expense, right, for renting out their IP to X, so that they have a zero profit. The government knows this is a tactic, and this is why you have to have what we call a study done. Okay, it's an extensive study that says, hey, this is a legitimate price I'm paying my own company. In other words, I'm shifting this income out of the United States to my own company legitimately, right? The price is legitimate. It's not a way for me to evade taxes, right? So just, wanted to give you a little bit of a higher level tax tidbit. I know this is not something that many people will have to encounter, because a lot of, domestic business owners, small business owners, they don't have this kind of reach. But I want you to know there is context behind this. So, moving forward, I will try and give a lot more information to these kinds of things that can seem overly simplified. Okay, so thank you, subscribe, and I'll see you later.